All right, Mo Kama's Sunday service. Today we are talking about whether the bull market has already begun, right? Um, I'm Mo Kama's, Momar Reed. I'm an attorney that I watch the market every single day because I personally have a lot of money in the market as it relates to my retirement accounts, and I love to swing trade weekly. So, um, when we're looking at whether or not we're in a bull market or a bear market, a lot of you have heard me say this before. I'm looking at the four major engines of the market, or I should say, not pistons. What are they called? Uh, if I had V8, right? Whatever. Oh, cylinders. There we go. Here are the four main cylinders of a market. If we look at the market as like an engine, right? So you got the S&P 500, which I look at the futures, which is this ticker. You got the NASDAQ 100, which is mostly the tech sector, which is this ticker of the futures. The Dow, and you got the Russell 2000, which is going to be your small caps, right? Your smaller publicly traded companies, right? So first, let me before we talk about how tariff negotiations are going to affect the market, let me get to Thinkorswim. What happened? You guys can see my screen. This is the ES, right? This is the S&P 500. The reason why I'm looking at the index futures instead of SPX or SPY, the ETF version, is just because the futures are open more hours, so it's more of an accurate representation of what the market is doing right now. But you could look at SPX, you could look at SPY too, right? It's pretty much the same thing as far as I'm concerned, but when we're looking at the market globally, I'm looking at this because the S&P 500 is the most well-rounded index that has a bunch of everything in it. Yes, it is tech heavy like every index is right now, but this is the most balanced index out there. And I'm just looking at it, and right now I see we finally got over that hump over the 200 moving day average right here, this yellow line. You'll understand that this yellow line on my chart is a 200 period moving average. The blue is a 50, the orange is a 34, and the green is I think a 21. I believe it's a 21. Yeah. Right. Those are the moving averages that I typically use on my screen, exponential moving averages. And you'll see with the ES, like last week, we finally got back over that 200. That 200 is very important for me because that's where a lot of things tend to happen, right? Whether being on the top side of it or the bottom side of it, right? So for me, looking at this and just look how flat this thing is. If we pull out a little bit, right? For the last couple of months, the 200 period, the 200 day moving average, because we're on a day chart, right, is just been flat, right? And me, I hate this, especially for my swing trading. I just need direction. Whether that direction is up or down, you'll see here where like the tariff announcements, right? If you like, how did the announcements of tariffs affect the market? Look at this period right here, right? That's how tariffs affected the market, right? And then once they start announcing that we're negotiating, tariffs are coming off or not going to be what he said they were going to be, we started coming up a little bit, right? Not to mention, if you guys have been paying attention over the last 2 or 3 weeks in the earnings of these mega caps like Microsoft, Apple, Google, Amazon, Nvidia hasn't hit yet, but a lot of these mega caps, their earnings weren't that bad, right? If not that bad, some of them were damn good. Specifically, like Google and Microsoft's earnings were damn good. And even the Apples and whatnot of the world that are talking about potential tariff hits to their stock prices in the future, their current earnings weren't that bad, right? Not as great as Microsoft's and Google's reports were, but these companies are making money and their revenues are growing. And so I think that's also a reason, in addition to the president coming out not being so heavy-handed on tariffs for all countries has led to this rise back up to where I would say we're neutral, because this isn't really showing me if we're positively trending up past like this 200, or if this is a ceiling and we're going to come back down depending on how negotiations go with China, which are ongoing right now. From what I've heard from the news, the negotiators are literally negotiating this weekend about what these final trade deals are going to look like, right? Who's going to cave? Are we going to go back to the norm? What's going to change, right? And if we're looking at the NASDAQ 100 through the futures as well, same thing. We're right at that 200. That 200 looks flat, right? And we see we dipped all of these shorter period moving averages, dipped underneath the 200, and now they're kind of coming back up again. But as far as I'm concerned, at least with the NASDAQ, we're like flat. We're neutral. So is it bullish? I don't know. Is it bearish? I don't know. I feel like we're in like wait and see mode. So just looking at the chart, right? This is over the last couple of months. Like I haven't seen a 200 moving average just be this flat in a while. Like it's not curved up and it's not curved down. All right, let's look at the Dow, the third major index in the stock market. You'll see same thing. This one hasn't quite hit the 200 and moved above it, except on this candle right here, which was the Thursday candle. But we're same thing, except I would say the ES and the NASDAQ are a little bit slightly more bullish than the Dow is, but it looks almost exactly the same, right? And this is weird for me because typically these indexes are going to look differently. But if you look at this drop pattern right here and coming back up, you got 3 straight indexes that look almost exactly the same, right? Which tells me that they're all being affected by the same thing, which is tariffs. But like the pattern is exactly the same. And usually all of these things don't move in tandem like this. And the fact that they're moving in tandem is telling me that they're all being affected by the same news. Looking at the last sector, the small caps, the Russell, looks, this is the only one kind of similar, right? Here's the same when tariffs were announced. This is what we got. However, the Russell, I would say, is the least bullish, right? It's the furthest away from the 200, but even still looking at the 200, it still looks relatively flat, right? It's curving down a little bit, but it's not curving up like dramatically or curving down dramatically. I still think we're relatively flat, even with the Russell. But the Russell is struggling the most out of all of the indexes, right? So I don't think we're in a bull market or back to a bull market yet. I feel like we're more in like a neutral sideways market. Everyone's trying to figure out how these trade deals and tariffs are going to shake out before they start making bets on a particular sector. That's where we are. And that's just me just looking at the charts, looking at the major 4 indexes. And so with that being said, let me go back to my presentation. I think tariff negotiations, given that all of these companies, these massive companies, just reported earnings over the last couple of weeks. If we look at last week, we had Palantir, AMD, Novo, but it was the week before that was even more consequential when we have Visa, Microsoft, Meta. Oh, Meta performed really well too. That's one that I forgot to mention. Apple, Amazon, Lilly, MasterCard, ExxonMobil, Chevron, right? So we've had most of the major companies report with the exception of NVIDIA. NVIDIA is probably the last shoe to fall. And typically, let me just go look at where we are with if NVIDIA's going. It's not this week, so it's probably the next week. Where we usually reports a little later. Oh, NVIDIA, damn. We actually got 2 or 3 weeks before NVIDIA reports. So NVIDIA is reporting Wednesday, May 28th. So that and CRM's the same day. Not nearly as big if you see the market caps, right? NVIDIA is 10 times the size as Salesforce, and Salesforce is huge. So this is really the last shoe to drop. I would think from this earnings period is Nvidia on May 28th, but we don't really have a lot of big companies or anything reporting until then. But this is the last one of the mega caps to report. Other than that, though, these other companies did relatively well in terms of growing revenue. Now, I don't think some of the tariff effects are going to hit until next quarter, but just looking at the health of a lot of these tech companies, a lot of them look healthy. As far as I'm concerned, looking at their earnings reports and whatnot. So for next week, uh, I'm looking for some sort of trend. And me, I'm a trend trader. I don't trade or I don't use a lot of butterflies or iron condors where like I'm trading sideways markets, right? I would use an iron condor if I were to trade a sideways market where things aren't going anywhere, but that's not really like my style of trading. So I haven't really put on a swing trade, and I would say in a few weeks because there hasn't really been any strong trends that have like triggered in terms of where I've placed like my entry points. A lot of potential trades haven't triggered for me over the last couple of weeks because I just think we're in this wait and see moment where everyone wants to know where we're actually going one way or another. Um, Actually, let me do my disclaimer before giving you my names. Once again, and it's in the notes of this video, this is for informational purposes only. I am not a financial professional or advisor. You should refer all your trades and investments to your advisors and do your own research because trading and investing is risky. What I got for next week is Microsoft, Uber, GE, and AVGO. Those are the four that are on my list to potentially swing trade next week. And you'll ask, well, why is that? Well, if we look over the last 30 days, I go to koifin.com, go to the US sectors, and then check off the sectors that I tend to trade. If you look over the last 30 days, what's leading? Chips. GDX is there, which is gold miners. However, if you go look at what from April 8th to April 10th, like if you exclude that, GDX or gold has been relatively flat. So that is not on my list for this week. It's been relatively flat if you exclude the first couple of days of the last 30 days. And then XLK, which is more tech, semiconductors, tech, metals and mining. I really don't like specific names in there. There's maybe one that's not on my list, but it might go on my list next week. It's just NEM, which is kind of in the gold sector, but because metals and mining in general are up, potentially Freeport McMoran to FCX, but I got to see that kind of break a new high before I would trade that. And then XLI, which is where I got Uber and GE from, right? And so and I've already kind of pre-looked at these, but that's my list. So from the SMH, the only one I would think about trading is AVGO, but that's a little expensive on the option side. And I kind of want to start seeing some of these chip companies break their old highs before I would swing it again. Um, XLK for me, the strongest name that I've seen was Microsoft, and then XLI, that's I said Uber and GE. So if you ask me why, let's go to the charts. Let me go to my trading charts. In fact, no, let me go here first. So if we go XLK, which is trending high, same thing. Qs, same thing. They're weighted a little bit differently, but you'll see some of the same stocks in the Qs that you'll see in XLK. I see a lot of neutral trends on this stuff. Like even though they look like they might want to go from neutral to bullish, like on Nvidia, AVGO is a little bit more bullish than Nvidia, right? If you just look at how many candles and how many times it's broken its high over the last couple of weeks, it's broken its high once, twice, three times. So that's a little bit more bullish than like Nvidia to me, which is why that's probably the only thing in the chip sector right now that I'm willing to trade. And then everything else right now that it looks like and if we look at the indexes earlier, right? We looked at the indexes, right? These are looking kind of the same, like they've gotten out of bearish territory, but they're stalling at a particular point where everyone's trying to figure out what's going to happen with tariffs. The only thing that looks really, really good to me, bullish in XLK, is Microsoft, right? Bullish momentum, bullish trend for my tools that I use, that I pay for. And I like that massive candle after earnings. And it hasn't really come down, but I am waiting for a pullback on it to come back to the upside. It looks more bullish than everything in the tech sector, which is why that is probably one of the main names that I would trade. Maybe I might trade the entire sector in XLK or QQQ, but Microsoft would be my preference to trade that over everything else because it is the strongest. If I'm going to trade something to the upside, I want to trade the strongest name. If I'm going to trade something to the downside, I want to trade the weakest name. All right, so that's XLK. If we go into XLI, look at GE. GE has been really bullish, breaking new highs over the last couple of weeks. Caterpillar looks okay. Uber looks really bullish too, especially after earnings. I would actually prefer to take that over GE because if you just look at this, this is a 34 moving average of representation, 34 period, 34 day, right? This is a little bit more parabolic than GE's, which means it's a little bit stronger. So I would rather trade Uber and GE. And what I love about trading names in XLI, actually, this name looks pretty strong here too. Not as strong as these two, but what I love about trading a sector like XLI is that this is not a sexy sector. Most people aren't talking about this. Most people aren't going to be hiding out in these names unless you're an actual trader, right? A swing trader. So they're not going to be talking about buying a ton of GE shares or Uber shares on CNBC. They would rather talk about Tesla, Nvidia, Microsoft, all of the big sexy tech names. Um, but Uber looks really good next week and GE looks really good next week on a pullback. If they have a substantial pullback to a potential level, specifically Uber, this level right here around $80 looks really good. And GE maybe like what I have at 205. And I know if I had an alert there, I probably saw some volume close to there as well. I would also go check the volume levels. But those are my names, and that's why. It's because they're in sectors. Even XLI looks like it's going to start trending positively. But the strongest names in XLI are GE and Uber. So those are the two that I would rather trade over the entire sector. And then a lot of times the options in XLI aren't really that liquid. I tend to find more liquidity in GE and Uber options. So those are my names for next week. I'm trying to kind of do some shorter classes to kind of try this out. So that's really all I got for y'all today. Wanted to show y'all what I'm looking at, why, how I'm viewing the market, and then from a swing trading standpoint, which is how I make some cash every now and then, what I am looking at from a swing trading standpoint. But if you look at the last 30 days, most sectors, with the exception of healthcare, which is a safety sector, are positive, right? Even consumer staples. Well, maybe that's a little flat too. This is a safety sector too, but it's like we rebounded. Energy has been flat as well, but everything else is pretty much rebounded. But I'm just taking the strongest names in the strongest sectors right now. So right now, from an SMH standpoint, that's AVGO. From an XLK standpoint, that's Microsoft. From an XLI standpoint, because I skipped over metals, it's Uber and GE, which are trending or stronger than some of the names in XME, which is why I'm going with that particular sector. And look at that orange line, right? That looks like a positive trend to the upside. So those are the names that I'm looking at next week. If you guys want me to review anything, here is your chance, Isaac or Angelo, if you want me to look at a particular name that you're looking at.
Not off the top of my head. If I would have known, I would have.
Well, I'm just saying, I specifically, you want to look at AMD or Google?
Yeah. Actually, let's look at AMD, man.
All right.
Got in at AMD at 110.
Yeah, and see, this is what's promising to me. Look at SMH over the last 30 days.
Yeah, yeah.
Semis are at least trending, and they're the strongest sector in the market over the last 30 days. So I'm still holding my leaps because I gave it a year and a half. So I'm going to give it some more time. And, I just believe in the semiconductor sector in general. But looking at AMD, it looks like it's come down from that low, and trend has been breaking new highs consistently over the last couple of weeks. Also, I don't know. Did you see its earnings? AMD reported earnings a week or so ago, and look at the earnings. Beat expectations like they always do, which is why I F with AMD, right? And because their data center revenue and their AI chips are selling more right now, which is what I expected. Not as much as Nvidia, but this is like a steady as she goes company, which is why I still don't understand why they're 75% off. Because this don't look like Intel's earnings, right? Let's go compare. Look at Intel's earnings. Did they report recently? No, they're reporting soon. Probably. Look at that. That's terrible. Like in terms of 12.6 billion, their profit is negative, damn near a billion, um, and their growth was down versus AMD. So I just don't. For me, I'm looking for divergence. AMD's profits or top line revenue is up 36%. Their net income up 400%. That's because they probably did something last quarter, but right, that's up. Their net profit margins up, operating income up, right? They're beating their expectations by almost 4 to 5% in revenue. So, and then if you just look at their last few quarters, they are always consistently beating expectations. So for me, that's I'm saying my thesis still holds strong for me, which is why I'm not getting rid of my leaps. Like even looking at their earnings report, they're making more money and they're growing revenue consistently. It's not Nvidia, but they're growing revenue. So that's from like a fundamental standpoint. Um, but just looking at, let's go look at a normal chart. This right here, that looked to be the current low, but we'll see. Because right there, that 110 mark where we both purchased, that's looking like potential resistance. Can it punch through that resistance? If it can, then I think once again it's heading back to the upside. And for me, I'm just hoping that this is the low. And if it is, great. Because I just think there are a lot worse stocks to own right now that aren't growing top line revenue, that aren't in the hottest sector in the market over the last year or two. And this is the number 2 GPU in the market behind NVIDIA's GPUs. The only thing that could potentially hurt it, like every other thing in the market right now, are tariffs or inability to sell to China or chips to other countries, like everything else. And at first, we thought this was a chip problem last year. Apparently, every sector is going to have problems selling things to China because of all these new tariffs. So that's the main issue for a lot of companies. But if that can be resolved in some sort of way, I still like AMD over the long term because it is making money. I like their CEO. They're number 2 in the space. And like more than anything, I said we looked at the fundamentals. They're making money. So a company that's consistently making money, that's this discounted off its high, like for me, I'm still gonna hold on for a minute. Like I still think even when it came down here from here, that's not as big of a drop from here all the way down to here. So it dropped 1 fib level. I'm okay with holding. And like if you looked at my portfolio, I almost have my own semiconductor ETF. I own some AMD. I own some Nvidia. What else do I have in there? I own some ASML, and I own some ETFs with some chips in it too. So I kind of have, I would say, my own ETF of GPUs and the manufacturers. I would actually like to probably get into some TSM too, but AMD is a long term play for me. My options, let me see. Yeah, my options don't expire until June 18th, 2026. So I got plenty of room to see if my thesis is going to hold out, which is mainly a fundamental play for me, is that AMD is still making money. That's my opinion. Um, Google, once again, two main issues. ChatGPT, is ChatGPT going to steal search volume and or money from Google, uh, because people are going towards AI? And then number two, their monopoly trial is going on right now. So those are the two main issues: the government and competition from AI search providers. I've already gone on many of rants as to why I think Google is still strongly positioned to hold the lead unless the courts or the government do something crazy with breaking it up. Um, However, even if the court makes it divest Chrome or split up its ad department or sector or something, what I think is going to happen, because I'm an attorney, is that let's say that decision gets made towards the end of this year. Once that decision is made, what is Google with billions of dollars going to do? They're going to appeal that decision. That decision is going to take another year or two to finally finish the upper appeals process and then maybe go to the Supreme Court. And then chances are the appellate court's going to have some sort of decision and it's going to be remanded back to the lower court, and then they're probably going to have to retry some aspect of it. That's just my me reading the tea leaves as a lawyer, specifically with a company that has billions of cash just chilling. I imagine they're going to spend every dollar that they can to delay any potential ruling on its monopoly antitrust stuff, right? And then maybe get to a new administration or figure out if there's some other way that they can make money before they're forced to do anything with their ad tech or with Chrome, one way or another. And number two, I told you all the verticals that they have. They still have YouTube, which I think could grow in the future and will grow in the future. They still own Android. They still own all of the substitutes for Microsoft products that everyone uses for free, like Google Docs, uh, uh, Google Sheets, all Google Slides. They have Waymo, which is another potential billion-dollar, trillion-dollar vertical in automated driving cars. What else? They have the speakers. They just have so much. They have. They're working on quantum computing. They're working on semiconductors. Like Google just has a ton of verticals and a ton of money. And if we go look at, once again, like what what did Google make? Look at the earnings. Google's revenue is up 12% and it made $90.23 billion last quarter. Its net income is up 46%. The EPS is up 50%, earnings per share. Its net profit margins are up 30%. They're figuring out how to keep more of the money that they make. That's ridiculous, right? So this is why I am still comfortable. Like, I'm in leaps that are going to expire soon, and I'm trying to figure out whether or not I want to hold the stock. And I'm actually waiting. Hopefully, there's some big pop in it soon. I might keep it in my kids' account, at least long term, because that was the main reason I purchased them. And I'm still up on my leaps, probably like 25 to 30% right now. So I'm trying to figure out whether I should keep it long term. I know I'm going to keep it long term in my kids' account. I don't know if I'm going to keep it long term in my IRA. I'm not sure yet, to be honest. I'm not sure, but I will know within the next couple of weeks, one way or another. But that's my my ruling on Google. I get it; it has a lot of competition, But everyone, like, yes, an ad is as big as vertical, but if there's any other company that's trying to get another vertical, it's Google. Unlike Apple, that just has the iPhone and doesn't seem like it's even trying to enter into a new space. Like, and we're talking about augmented reality. Google Glass was the first one to do that over the Meta glasses and over the Apple's Vision Pro. Google was the first ones to get into that market too. So if they wanted to get back into that market, they probably already have a lot of the tech. So yeah, that's why I love Google, and everybody knows I love Google. But yeah, that's why though. Like the numbers make sense. It's making $90 billion a quarter. That's crazy, and it's down. So that better price, like I said, that 40% off price around that 148 would have been a better entry point. But yeah, I still like Google. It just has regulatory wins and uh, what else? And the AI wins. But also, oh, I forgot. Google has its own AI in Gemini. And if you've been watching the NBA playoffs recently, I've been seeing those commercials every 2 seconds in the NBA playoffs. So they're not just going to see the AI race to OpenAI and Microsoft. Like they're competing heavily within that particular space. And because they have Android, I think they're not Apple, right? But because they have Android, I do think at least over the other non-Apple companies, and Apple doesn't seem like it really wants to enter the AI race because of its inclusion in a lot of handsets because of Android. I think Gemini is actually strategically placed and in position to potentially compete really well in the LLM AI space as well. All right, that's it. Unless y'all want to look at something else. All right, hearing nothing else, that's Mokama Sunday service, making it rain without the umbrellas. Y'all have a good Mother's Day out there. Uh, Peace be upon you and your family. Deuces.
Back at you, man. Have a
Yeah,
great one.
yeah, you too.